Yesterday, the SEC suing crypto exchange Coinbase in New York federal court. The agency alleging Coinbase was operated as an unregistered exchange and broker. Joining us right now, first on CNBC, is Coinbase's CEO Brian Armstrong. Good morning to you. We've been debating this at the table for really the last 3 hours, frankly, already. But we're glad to have you at the table to join in on this discussion. Help us understand from your perspective, when you first saw this lawsuit, what your reaction was, and to the extent that you have a defense, and I know you've taken to Twitter, but now you can take to the airwaves, what it is.
Yeah, well, I mean, we were disappointed to see this complaint from the SEC because I feel like we've had a long history of being very transparent with them and really every regulator around the world that we've worked with. So even going back to 2021 when we became a public company, before becoming a public company, you have to disclose everything about your business in depth. There was many back and forth revisions of our S1. And frankly, they had all the knowledge then, and they allowed us to become a public company. And then we're going through time, and Chair Gensler has statements to Congress saying that he doesn't feel he has the authority to regulate this industry. And we're seeing conflicting statements from the CFTC and the SEC chair. And we even filed a formal petition with the SEC asking them for clarity about a number of points in the law, which they never responded to. And then this Wells notice and a complaint arrives. And so this isn't good for America. It's not good for the industry, obviously. And we now need to go get clarity from the courts.
I want to show you, Chair Gensler was on CNBC yesterday. I want to show you a clip and get you to react, if I could. Take a look at this.
In the Coinbase complaint, we note that they have, through the Coinbase wallet, you can trade 16,000 different tokens. And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments. And you have entrepreneurs representing digital investments on this program all day long. And it's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world. So what is the real underlying value of these tokens? And that's why you need full, fair, and truthful disclosures.
Do you think this is about disclosures, or do you think this is about the underlying currencies that are on your exchange?
It's tough to know exactly what he means by that. I mean, our self-custodial wallet is not trading crypto, the ones that he mentioned some huge number. That's happening in DeFi. That's not something that we actually operate the trading of. Our centralized exchange is really trading a much smaller number of assets. We reviewed over 1,000 assets in crypto. We rejected 90% of them because we felt they weren't appropriate for our exchange. And about 200 of them are listed on our centralized product. And I don't know, to his point about, what's the there. People are using crypto for all kinds of things. They're not just trading, and they're doing payments with it. Ukraine raised $200 million, and presidential candidates are taking it. And it's a new technology that can be used to update all kinds of financial services. And we don't need the government picking and choosing our technology winners. Let's let the market decide that.
When you spoke just earlier about the IPO and the IPO process and the back and forth that you had with the SEC, I think implicit within what you were saying was that they approved us as a business. And yet the prospectus itself, as you know, also says very clearly that effectively the SEC has not opined on the underlying business itself. And in fact, that the company can't actually legally say publicly that the SEC has. Do you agree with that?
Well, they allowed us to become a public company understanding the S1, right? And so I feel like that's our moment to be totally transparent with them, show them everything about our business and how it operates. And so it's not great to have a regulator sort of come back later and say, actually, we changed our mind. Well, this is already
Brian,
a
they didn't
public
change their
company.
mind. We had John Stark, the former SEC Office of Internet Enforcement Chief for 11 years. He was on earlier. He said it's very specific that in the IPO, the SEC does not approve these things. And it says very specifically they could come back and say that there is additional regulation that's required, or additional disclosures, or additional filings. And I think what they're very specific about is you call yourself an exchange, you call yourself a broker-dealer when it comes to Prime. Those are things that you need to register for if you're going to be, either an exchange or a broker-dealer, just like the NASDAQ or the NYSE would have to.
Well, so a couple points. One is that if you're trading commodities, that doesn't necessarily apply, right? we have actually gone out there and acquired a broker-dealer license because we wanted the ability to trade crypto securities. There's actually, I think there could be a big, robust market of crypto securities trading in the U.S., even though we don't list any securities today. And by the way, I think you're right. The regulator does have the right to come, edit their thinking at times and come back and say, here's a new set of rules, and great, we'd be happy to follow those. The issue in this case is that we're getting conflicting statements from the CFTC head and the SEC head. And then the statements from the SEC are so, such an outlier. They're saying everything other than Bitcoin is a security. Well, that's not our interpretation of the law. That's not what the law says. And that's not what the position of every other country around the world, their financial regulators, is taking. And so I don't think we really had a choice, honestly. We had to go to court to really see if otherwise this industry is just not going to exist in the United States if we took that position.
Warning there could be additional regulation is one thing, but bringing enforcement action on something you knew full well at the time was occurring, that I don't see how all of a sudden you make that leap. That just seems arbitrary and capricious and vindictive, almost.
That is a regulation by enforcement approach. And, we met with the SEC 30 times in the last year. They never gave us a single piece of feedback about what we could be doing better. We just got silence. And when we asked them, how would you like us to register? We have this dormant broker-dealer license. Could we activate that? We really got silence. And so it's not appropriate for the regulator to come back and do an enforcement action if we don't have a clear rule book and clear guidance.